What's up, everybody? Welcome back to Smart Money Academy. This is day 19th, and today we're going to be talking about time-based theory and fractality. So now we're really getting into the heavy stuff, okay? Now we're actually getting into some degree of high-level knowledge. So without further ado, we're gonna get straight into it, and I'm gonna try to make this as simple as possible, okay? So I'm gonna get this here that I pre-wrote. So it's important to understand that market structure repeats across all time frames, okay? So what I'm trying to say is that whatever happens on the daily is it the same thing as forming on the 4 hour, the same thing as forming on the 1 hour, okay? They're all correlated together, okay? So the 1 minute or the 1 month is the same story as the daily, just zoomed in, okay? So what I'm trying to say by that is whatever candles you're looking at here on the daily, right, on NQ, whatever structure you have here, you can find the same structure on a 1 minute chart, okay? It's just the only thing that it affects is, sorry, is whether your bias, for your short-term bias, your long-term bias, your short-term drawn liquidity, your long-term drawn liquidity, and the length of which you are going to be in a trade, right? You could be taking your bias off the weekly, taking your analysis off the daily, and your entry off the 4 hour, and you might stay in the trade for a whole week, right? Or a few days at least. Or you could do the same thing, take your daily bias off the 4 or the 1 hour, analysis off the 15, entry off the 1 minute, 5 minute, stay in the trade for maybe an hour max, okay? So, what I'm trying to tell you guys here is that chart fractality is a real thing, and there's a bunch of different concepts that I teach you guys, and the point of it all is to make them align, okay? So you could have a market structure shift breakup structure on the 1 minute, but you could have a power of 3 forming on the 5 minute, or you could have, and then you could have a 1 hour fair value gap, let's say. So if I was to let me actually make you guys even an example. So you have your 1 hour fair value gap right here. Let me see if you guys can see this. Nope, my face is there. I knew it. Okay, so let's go higher up here. Okay, so you have a 1 hour fair value gap here. This is a 1 hour fair value gap. Let me write it down. Actually, make it easier for you guys to understand. 1 hour FVG. Okay, you have some sort of buy side liquidity right here. Let's say. Okay, so, and then you have your structure, right? That's like this, like this. That's just going like this, 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 whatever. Okay. So this is your structure, and then this is going like this. Okay. Okay. Let's just say this is like this. So what we're seeing here is actually I messed it up. It's like this, like this, like this, like this, and like this, and like this. Okay, so this is your structure, okay? So overall, the trend is bearish, okay? It retraces back into your ET or OTE right? I'm gonna take that off because it's a bit intense, but you guys get the point. So it starts retracing. Again, your bias is bearish. Your drawn liquidity is going to be this yellow line this line right here, okay? So I'm gonna write it down like this. Draw on liquidity. All right, and there you go. So your drawn liquidity is right here, okay? So you expect market to go here. Now you expect market to retrace. Market retraces on the higher time frame. This is let's say a 1 hour chart. You zoom in once it gets to your buy sign, your area of interest, okay, where you're interested in taking a trade. So you zoom into this, and what is this? On a shorter time frame, this is an accumulation, manipulation, distribution that's forming, okay? It's a power of 3. Uh, like, you guys see what I'm trying to say? So you have every single thing that I taught you just on different time frames, okay? If you zoom out, let's say you zoom into this on the 1 minute and it's a power of 3, but you zoom out on the 5 minute, you could have a unicorn setup forming right here. Okay, you take this out. You might have a unicorn forming right here with your breaker block and your fair value gap entry retracement right here. Okay, so it's all about knowing how to align everything together with the different time frames, knowing that market structure repeats across all time frames and that the market is fractal. So every single time frame is going to have a different structure, but it all correlates towards the same, and it could also have all the same structure. Okay? So market structure shift, breaker structure, fair value gap, power of three, unicorn setups, CRTs, and I'm gonna teach you guys. There's a bunch of different concepts that I still have to teach you guys. They all show up everywhere pretty much. Okay, so high time frame gives the bias and low time frame gives the entries for me. So for me personally, I use the daily and the 4 hour as drawn liquidity and bias. Okay, I also use the 1 hour as drawn liquidity and bias. Okay. The 15-minute I use as a retracement to then target my drawn liquidity slash bias. Okay. And then anything below that is how I get my entries. So example here that I wrote, a daily fair value gap could have a full 5-minute power of three inside is what I just drew for you guys, right? So let me get this out of here and we're gonna keep going. Alright guys, so now we're gonna dive back into the time based here. And again, I pre-wrote some stuff here so that you guys, I feel like this is better for you guys if you guys see it rather than me just explaining it to you guys. So that's why now I do it like this. So smart money operates in time windows, right? It's not random. There are key times. There's the London Open if you guys are more inclined to trade at that time, right? It could be depending on your time zone. I'm not gonna take it out actually. There's a New York Open, which is there's 8:30 Open, which is there's usually news and stuff. There's also like a certain market that opens at that time. There's 9:30 stock market open, and then there's a 10 a.m. reversal, which is another thing that I'm going to talk about in another video. But just 10 a.m. in general is really good, so I'm gonna leave it like this. There's macros, right? So XX50 to XX10. So if smart money doesn't move in time, there's no move, no trade. I wrote that down because that's how it should be. The actual thing is though that if it's not in one of those time windows, 8:30 to 9:30 is more or less like it's it's like when the move happens, but you don't want to be in the trade at that time usually, or you try not to be. You want to enter after, right? Same for 10 o'clock. The macro, you want to enter in the macro though. Okay, so time reveal is intent, not just movement. What I'm trying to say here by doesn't move in time, no move, no trade is if you can get in a trade in an ICT macro or after 9:30 or right after 10, right? Those are A plus trades usually. They're usually never they rarely miss. Okay? If it's not in those times, the trade is still valid, it's just less likely to hit. So if you were to only trade A plus setups, I would say only trade in those times, okay? And nothing else. So what I'm trying to say with this video, guys, is that if you guys can align your time frames with your bias and your drawn liquidity with a bunch of different concepts and find your entry on the lower time frame within the time or within a good time to enter a trade, right? That these times are not random. The macros are candle closing and candle openings. The 10 a.m. Candle is the 4-hour candle open, the first one of New York session. The 9:30 candle is the New York session. The 8:30 is the market open. Um, it's just good times to enter trades. It's just more probable times. Right? So that's pretty much it for this one, guys. Don't forget to like, comment, subscribe, follow me on TikTok, Instagram. Go watch me live on Twitch. I trade there live every morning. The account's currently up almost 200%, so we're doing pretty good. And yeah, don't forget to study and make sure you go into your charts, figure that out. Time based is more something you have to watch print on your own. You can't really go back in time. I guess you can market replay or get an FX replay subscription, but I think it's better to just watch it print for a bit while you're on demo or in a funded, in a combine. Um, Other than that, the time-based fractality is just really something you could experience as you watch the chart. You can also go back and see it, but going back and seeing it is a lot easier to see it, if that makes sense, than to watch it print. Because when you watch it print, you don't know if it's going to go here. But if I'm looking at this, I know the price went here, so I know this is accumulation, manipulation, distribution. But if I'm here, you have to be able to recognize, okay, this is my manipulation, my accumulation. Manipulation is most likely to happen here, and then we're going to distribute, okay? So with that being said, guys, Have a good one, and I'll catch you guys tomorrow. Peace.